Most people think they are investing, but actually, they are speculating. Welcome to day 2 of Investing for Beginners, Graham in simple words. Today we'll understand one powerful idea from Benjamin Graham, the difference between investment and speculation. Once you get this clear, you'll avoid many common money mistakes. Let's start with investment. Investment simply means buying something for its real value, not just because the price is moving. When you invest, you look at the business, not just the stock price. You focus on whether the company is stable, has strong fundamentals, and can grow over the long term. Investment is slow, steady and safe. It is based on logic and research, not on excitement. Now, what is speculation? Speculation is when you buy something just because you think the price might go up soon. Maybe a friend told you. Maybe you saw a tip on social media. Maybe you don't even know what the company does. That is speculation. It is driven by short-term excitement, trends, rumors and emotions. And it is usually high risk. Benjamin Graham said that an investor's biggest enemy is not the market, it is their own emotion. When we get greedy, we chase hot stocks. When we get scared, we sell at the bottom. So if we don't control our emotions, even a good market can become dangerous for us. So here is the core difference. Investment is based on logic and value. Speculation is based on guessing and emotion. Investment builds wealth slowly and safely. Speculation can easily destroy it. If you want to follow Graham's way, your goal should be to think and act like an investor, not a speculator. This was day 2 of Investing for Beginners, Graham in simple words. In tomorrow's video, we'll talk about inflation and how it silently eats your money, and what you can do about it. If you found this helpful, please like the video, subscribe to the channel, and share it with someone who is just starting their investing journey. See you in day 3.